Thank you for joining me this Friday, the 18th of October. I'm Grady Wolf, market analyst with Ballarat, and this is the weekly market update. This week we had a mix of economic data, US earnings results and commodity price volatility that were the key drivers of market moves over the trading week on global markets. In the US, we had Wall Street start the week in record territory across the Dow and S&P 500 on the back of mostly stronger than expected results out early in this Q3 results period. JP Morgan Chase rose 4.4% last Friday after topping profit and revenue expectations for Q3, while Wells Fargo rose 5.6% on stronger than expected profits in the same day. Morgan Stanley gained 7% on Wednesday this week after beating Wall Street expectations for Q3 earnings and revenue. United Airlines also beat estimates in Q3 and forecast strong results for Q4, which boosted shares in the leading airline up 12.4% on Wednesday. Walgreens shares have been on a tear this week with a gain over 17%, putting US pharmacy store giant on track for its biggest one-week gain since December 1987. The move comes after the company announced it will close 1,200 stores by 2027 to cost cut, in addition to the release of the company's Q4 results, which beat estimates. Around 50 S&P 500 companies have posted results so far, with 79% of those beating expectations. The strength of equities in this high interest rate period of Q3 is welcomed by investors who have been increasingly concerned of a potential recession over a soft landing in the rate cut cycle, as economic data has been equally weighted in favour of both scenarios. The Fed does have a tough job, though, over the coming months to monitor economic data and the stability of the economy to avoid a recession in the world's largest economy. The strength in the Q3 results so far has driven markets to record territory across the major averages this week. Elsewhere, we started the week with key economic data out of China that reaffirmed the sluggish economic recovery in the region and halted the stimulus-related global equities rally this week, as there is still much to be done to materially reignite growth in the region. China's inflation rate rose just 0.4% in September annually, where the market was forecasting a 0.6% rise. Month on month, the inflation rate was flat, while the market expected a 0.4% rise. Producer price index in China fell 2.8%, which was worse than the 1.8% decline reported in August and worse than economists were expecting. Vehicle sales in the region also fell just 1.7%, which was actually better than economists were expecting at a 5.6% decline. All of this data paints a weak economic picture out of the world's second largest economy, indicating desperate need for the stimulus package to be injected into the economy ASAP. The latest stimulus announced later this week came in the form of an expansion to the original stimulus in China to 4 trillion yuan to support whitelist projects in housing that are eligible for financing and increased bank lending for such developments. The stimulus expansion underwhelmed the market, though, and the economic data weighed on iron ore prices this week. The stimulus addition this week, though, failed to impress investors as well, with ongoing fears that the amount is just not enough, and led to the price of iron ore tumbling to a 3-week low. Whether the stimulus is enough will tell over time and over the coming months, as investors assess key economic data and demand for iron ore and other commodities out of the world's second largest economy. Let's look at what happened locally on the markets this week. Locally, from Monday to Thursday, the ASX 200 rose 1.72% as a 4% gain for the financial sector boosted the key index to a strong end to the week. The winning stocks from the Monday to Thursday on the ASX 200 were led by gold miner Regis Resources, jumping 22.22%, while AMP added 19.92% and Westgold Resources gained 16.86% over the 4 trading days. Web Travel Group tanked 37.7% this week following the release of the company's trading update. IDP Education fell 9.41% over the 4 trading days, and Mineral Resources ended the week down 7.24%. On the broader market index, the All Ords rose 1.56% this trading week as Lake Resources soared 46%, while OFX Group tanked 38.45% at the other end of the All Ords. The most traded stocks by Bell sell direct clients this week were CBA, Westpac and Insignia Financial. Clients also bought into New Hope Corporation and Grain Corp while taking profits from Macquarie, Arcadium Lithium, Fortescue, ANZ and MA Financial Group. And the most traded ETFs by our clients this week were led by BetaShares Geared Australian Equity Hedge Fund ETF, Vanguard Australian Shares Index ETF and Vanguard MSCI Index International Shares ETF. On the economic calendar front next week, we may see investors react to Australia's Judo Bank manufacturing PMI flash indicator out on Thursday, while overseas in the US we can expect markets to react to US new home sales, durable goods orders, manufacturing PMI initial jobless claims and existing home sales out throughout the week to further gauge the health of the US economy. And that's all for this Friday. Have a wonderful weekend and happy investing.